Hello everyone, welcome back to How to Hack the Economy. A couple of weeks ago, I posted a video talking about the growth in the stock market despite the continued economic downturn. And after just a few hours, an article came out by the CNBC reporting all-time high employment statistics. Now, I'm not just telling you this to show the juxtaposed nature of the economy, which was ironically what the last video was about. I am bringing this to light to answer the question on everyone's mind. Is the economic crisis finally over? Before I delve into this, I want to go back to a concept discussed in my previous video, the idea of different types of recovery. There are three main ones, the V-shape, the U-shape, and the L-shape, and they all indicate how bad a particular shock was to the economy and how effectively the economy has rebounded, with the V-shape being the best outcome and the L-shape being the worst outcome. In my earlier video, we discussed that economists felt that a V-shape or a U-shape recovery are the most likely outcomes, but now we aren't so sure. For starters, on the 28th of May, Oxford Economics chief US economist Gregory Dacko was featured on Yahoo Finance to review the GDP numbers for the first quarter of 2020. He said that, "I think we're past the idea of a V-shaped recovery." At that time, he had every reason to believe this. The 2020 report for several economic indicators for the first few months of 2020 had been released, showing the impact of the COVID-19 crisis. GDP in the US was down by approximately 5% in the first quarter. Corporate profits took a nosedive of 12.3% in the first quarter. Durable good orders in the US reduced by 30% in the months of March and April. Unemployment rose to 20.8 million in April. And consumer expenditure in the US shrank by almost 20% in March and April. What's even worse is that in the second quarter, the GDP of the US was down by 32.9%. At this point, anyone would have concluded that we may not even be looking at a U-shaped recovery because these numbers show a terrible downward trend. In fact, the only thing that seemed to be going for the economy was the rebound of the stock markets. Suddenly, in the last few months, we saw a tremendous upward trend in almost every economic indicator. Like mentioned before, every major stock index soared and prices are still climbing. In June, 4.8 million jobs were recovered in the US. In July, the employment rate increased by 2%. If more people have jobs, then more people have money to spend, improving economic health. For the first time since the start of the new year, consumer spending in the US is up by 8.2%, which shows that people are in fact spending money. Another sign of improving economic health is the home construction and home builder sentiment, which is currently skyrocketing. According to CNBC, home builder sentiment has jumped back to pre-pandemic highs at 14 points on the 16th of July. The construction of US homes jumped by 17.3% in June. Mortgage applications were up by 15% in the same month, and application for building permits increased by 2.1%. CNBC even stated, to find a V-shaped recovery, look to the nation's home builders. Another indicator for improving economic health is the orders for durable goods, which have also jumped in the United States, going from an 18.1% slump in April to an increase of 15.1% and 7.3% for May and June respectively. So simply put, the economy has showed recovery in stock markets, employment, consumer spending, home builder sentiment, demand for housing, and durable goods orders. Bear in mind that this was seen from only 2 months worth of data, so it's nearly impossible to come to a conclusive answer to whether or not the financial crisis is over, but we can say with confidence that there is a positive upward trend. Now, while all this is going on, COVID-19 cases have not decreased to the extent where it doesn't pose a threat anymore, and as can be seen on this chart, cases have been fluctuating between highs and lows. But it's still the case where there are several million people who are still infected with COVID-19. In fact, 75,000 people were infected on July the 19th alone. So if the cases are not going down, if lockdown is still functioning to the extent that it was earlier in the year, and most of the world is still pretty much in the same position in terms of the spread and contraction of the virus, why is the economy improving? It's because we did what humans do best: adapt. We have adapted to every challenge the world has thrown at us, and we did so through unity and sticking together. And that is exactly what we did. We supported each other, we helped each other, and rebounded from this devastating pandemic. We found new ways to make the wheels of the economy turn without even stepping out of our houses. We changed the world from the comfort of our home. Charles Darwin summed up very beautifully why we have dominated this planet and why we will come out of this pandemic successful. It is not the strongest of species that survives, nor the most intelligent. It is the one that is most adaptable to change.